Tattooed Chef just reported its earnings the other day, and I want to talk about what I think about these numbers, my plan going into the stock, and the massive move it just made upwards. We're going to go over a lot of different stuff in this video, including the rescheduling of the company's earnings report, the issues that they had filing their 10Q, the numbers that they reported last year in May, and then as well as the numbers that they reported just now. We're going to be looking at the hypercharts, the stock price over the last year, and potential upcoming catalysts to take the stock up or down. But either way, guys, if you haven't seen me before, my name is Jordan. I'm a millennial investor. Down below is my referral links. If you want to get signed up with M1 Finance, you can get up to $50 for getting signed up with that. We have other things to get signed up with, like Robinhood and Webull, Yada savings accounts, my PayPal and Cash App, swag bucks, multiple credit cards, and my contact information down here, down below. But anyways, guys, I hope you enjoyed this video. If you like this video, make sure to subscribe and hit the like button down below. But let's jump straight into it. If you take a look here, this is my Fidelity portfolio, currently sitting at $39,277, just short of our all-time record. But one of the biggest highlights of this portfolio yesterday was Tattooed Chef's massive move upwards of 14.81%. Just yesterday, this had a massive move up of $2.36 a share, and definitely helped revive the stock price for where I own the company at. Now, I own it at an average price of $19 even, and I own about 600 shares. And so let's talk about what took this company up and what the potential catalyst could be moving forward. Now, first of all, there was a lot of drama going into this earnings report, because this company announced that its earnings were supposed to be released on November 10th, 2021, about a week ago. And then minutes before the release, they rescheduled their third quarter 2021 earnings, okay? Little weird, little interesting. I'm not really sure why they did this. They never really explained, at least not anything that I could see, but it is a little bit fishy, so it's just a little odd there. Now, after that, what's even crazier is that their numbers got released moments before the new release date. They initially announced that they were releasing their numbers on November 10th, and then they moved that numbers back 6 days later to November 16th. And then about 30 minutes before the market closed, these numbers were released early. People got access to the information that they filed with the SEC, and they already had information for net income, earnings per share, revenue numbers, and lots of other things like that. And so, as if this delayed earnings wasn't already fishy enough, it was released early before the earnings. I've never seen that before whatsoever. I saw the stock move rapidly before this company even announced their earnings, and I was like, what's going on? But anyways, that's something fishy that happened there. And now furthermore, forgetting that news, regardless of whether or not this company had fishy activities going on with their earnings, what's more important here is looking at what the company reported, and based off of what they reported about 6 months ago. This is the article that they posted on May 18th, about 6 months ago, and this was the announcement of the acquisition of New Mexico food distributors in Carson Tortilla Factory. Now, the important thing to notice here is that if you take a look at my mouse and you look at what I'm highlighting, right here, the company continues to expect full year revenues of $235 million to $242 million, an increase of 56 to 63% compared to 2020, and adjusted EBITDA in the range of $2 to $4 million. Okay, so remember those numbers. We'll come back to them. But $235 million on the low end of revenue, and about $3 million worth of EBITDA. Looking at what they came out with today, right now their outlook for the full year 2021 now is expected to be 210 to 215. While just earlier, a couple months ago, it said 235, 242. So that was a lowered expectation. And looking at their EBITDA a couple months ago was expected to be a positive $2 to $4 million. Now it is expected to be a negative $18 to $20 million. Now, another thing that I liked about this company was that they had a huge cash pile. Now, going ahead and take a look at Yahoo Finance here, when I started investing in this company, I believe it was April of this year. So it was right after they reported this number. As of the time I started investing in it, they had no debt, but they had $185 million in cash. Now, they did have some accounting mishaps happen in the last quarter, so that took that cash down significantly. but they took that down to 140 million. It's not the end of the world. They're also making acquisitions, so it's not a huge deal. But now that cash pile is declining even further, and now it's at 129.5 million. Now, this is concerning to me. The reason why that cash pile is going down is for multiple reasons, but one of the main reasons why it's going down, aside from its acquisitions, is actually because of its advertising expense. If we go ahead and take a look here at the hypercharts, I want to talk about the revenue growth for Tattooed Chef. Now, when I was first buying into this company, this was a company that it's a food company. What makes Tattooed Chef less of an attractive business compared to something like a Netflix is the profitability. When you look at something like a Tattooed Chef, every time someone wants to buy their product, they have to produce it, they have to ship it, and they have to put it up in a grocery store and sell it. If you have a company like Netflix, they don't have a lot of those extra expenditures. Sure, they have to produce films, but there's really not a whole lot that they have to produce. It's same thing for like comparing it to like something like a SaaS business. If you're looking at Microsoft, they have a suite of Office products, and they don't really have to remake those every day or every week. For Tattooed Chef, they have to constantly reinvest back into themselves and build out more and more and grow their business that way. Now, that said, I know this company has lower margins, as any food company does. I expected them to have higher margins since they're a vertically integrated business. They are still building that out with the acquisitions, and I get that. But the one main thing for me is that if I'm going to invest in this company, the main reason why I was so bullish on Tattooed Chef is that if we take a look here at Yahoo Finance and we look at the analysis tab, based off of this year's revenue, they still haven't updated the new guidance. Before they updated this new revenue, this company was expected to finish out with 61% revenue growth. 61%. And it looks to me like that's not going to be the case whatsoever. Now, it will still be good revenue growth, probably somewhere in the 40s, probably around 40 to 45, and that's great. There's nothing wrong with that. But if I'm going to invest at a pretty reasonable valuation food company, I wanted to see this company come out with, I was expecting, to be honest, I was expecting more than 61%. I was expecting, let's see, the analysts projected that this company would come out with 239 million. If I got to be honest, when I was first investing in this company back in April of last year, or April of this year, I should say, 250 million is probably what I was expecting. And I was expecting even a greater number for 2022, and now I'm not so sure. The analyst projected 323 million for next year. I was probably expecting something like 340 to 350 if I'm being 100% honest. Looking at this revenue growth, like I said, it's still great. It's still great numbers. Looking at a year ago, it's still 40-50% revenue growth. That's great. But the issue I have here is looking at the net income. Now, the problem I have with this is that, once again, I expected this company to have much greater revenue growth. But upon that, what's more interesting here is that now this company has a pretty sizable marketing and advertising budget. If we go back to their reports here and we look at what this company spent just on advertising and marketing, you can see that they spent about $3.4 million in marketing expenses. Now, looking at their net income, these have steadily gotten worse. Another one of the main reasons why I invested in this company is these numbers right here. The fact that this company could grow 30, 40, 50 plus percent, whatever the numbers are. Well, let's say that this company only grew 30% every single year for the next 5 years. That would still be incredibly good. The fact that this company could grow 30, 40, 50% and put up positive net income is one of the main reasons why I invested in it. 1.48 million positive, 1.63 million positive, 4.8 million positive, almost a million, 916,000 positive, a small loss there. And then ever since this quarter 3, other than the one quarter that they had the exception with the accounting numbers that they had for deferred tax credit, this company has never put up a positive number, and it's actually gotten steadily worse. -3 million, -7 million, -8 million. You can ignore this number because, once again, another one of those accounting procedures with a deferred tax credit, but ignore these two big jagged numbers here. But you can see -7 million, -8 million, and the same thing follows along with the operating income, so we can take out these big jagged numbers. If we take out this and we just look at the operating income, positive 2.15 million, positive 1.99 million, positive 6.8, positive 1.6, and then it starts going negative, -3.4, -1, -7, -7, -7. You can see that this company is consistently losing money now on a consistent basis, and that is something that I do not like. Now, looking over the last year of Tattooed Chef, like I said, yesterday was one of the biggest green days that this company has ever experienced. And looking over the last year, even after today's massive run-up, they're only up about 5% in the last year. You can see it, they traded within this range and it's pretty much went nowhere. Now, I originally started buying this company at $17.21, and since transferring over all my investments, because I used to use Robinhood, M1 Finance, I have transferred everything over to Fidelity, and now I have an average price of 19, even though I started buying at an average price of 17.21. But regardless, I am finally starting to look at getting close back to where my original cost basis is through Fidelity. Now, looking through Webull here, one thing that's really interesting is looking at this company's short interest. Now, to expand upon the reason why I think this company went up yesterday, didn't have a whole lot to do with the fundamentals. It actually had to do with the short interest, in my opinion. Looking at the short interest over time, you can see, especially in the last month or two, it's steadily increased, and we're now hitting pretty much a new all-time high for the short interest at almost 15 million shares. Now, this company is growing quite nicely, and I think over time these shorts will get burned. But it's really interesting to see that right now the stock moved up 14% on a reduced revenue guidance, and the company has all-time short interest and almost no shares available to short. If we look at Webull here, you can see that the projected borrow fee rate, according to Webull, is 54.36%. And if you go to Fidelity and you try to sell short, look at what it tells you. If I click sell short, it actually doesn't even give me the option to sell. It puts it at 0, and the only way that I can get access is to call, and even then they probably still won't give access to shorting. And so this shows that this company is shorted at a massive level, and it's starting to go up. Right now I own my average shares at an average price of $19, and I've had some massive winners throughout my other companies, and Ttcf has by far and away been my biggest loser. Even after this big run up, I'm still down on the company after it having almost a 15% green day. That said, I have bad news for you guys. I'm probably looking to sell my shares, likely around my cost basis or higher, $19, $20, and if today, who knows, with this whole short interest situation, it could be a couple hours after I film this video. If it goes up to $90, especially $20 a share, I'm likely going to be exiting my position. Now, Ttcf is still a company I love. If they are to go back down in price or stay at this level for many months more as they continue to grow and expand, I might even buy back in, who knows. But as of right now, there's just better places to put my money, and management has really lost my faith of confidence. When I buy companies, regardless of what the numbers are, I have to have confidence. I have to have belief in that company. Because as you can see, like I'll tell you, when I was a dividend investor, for example, I bought Wells Fargo. Now, luckily, I sold them long before the pandemic started and before the company started to cut its dividend, but I didn't have confidence in that company, and I sold them. And it turned out to be one of the best decisions ever, because shortly after, the company tanked dramatically. I also had a similar decision with AT&T. I actually had the company cut its dividend just a couple months after I sold it, but consistently I held it and I was not confident in the company, and I never really made money on it, and I would have made more money putting my money in something else. And so regardless of whether or not this is a good or bad decision, I have to be confident in my investments, and I've lost a lot of my confidence with Ttcf. So with that said, I'm going to take my little to no profits that I'm going to get from selling this stock at $19, $20 a share, and I'm just going to walk away from it. I'm going to put that in other investments and continue to thrive in this Fidelity portfolio. Hopefully, at least. But anyways, guys, go ahead and check out the description down below for referral links to M1 Finance, Robinhood, Webull, and all that good stuff down below. Thank you guys so much for watching, and I'll catch you guys next time.